Do 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 do. All right, Chuy, Chuy, whatever. Ticker CHUY on Nasdaq, and that is Chuy's Holdings Inc. What does it hold? Bananas, oranges? Don't know, don't care. Let's start with seeing the higher prevailing trend on the monthly candle chart, applying my classic chart trading framework to see if we have the sales, the wind in our sales for the weekly. All right, let's do it. And remember, these are monthly candles, and when we go down on the 5-year weekly, 1, 2, 3, 4, 5, 6, 7, 8. No, like all, even this 1, 2, 3, 4, 5, 6 going to be a good chunk of the 5-year, and that's what we're going to be focusing on. So here we have a bottom formation. Here we seem to have had a breakout. Oh, draw my lines. Can't get it straight. Okay, here we go. I think possibly we had a breakout of this 1, 2, 3, 4, 5 month in April, with the measure move being right here, reached. So right now, what else do we have? Remember, patterns encompassed by bigger patterns. This would be the bigger pattern. Use your imagination, scoot over the chart, create yourself some black area. Emotion management, make sure you don't let the chart cheat you into being biased for direction. Remember, oh, look, this looks like a top. I can only go down. And if I do the inverse, oh, look at this big bottom. Try to put in the middle, scoot over the margin, and just try to imagine both case scenarios. So right now, I could imagine this would be a base. Maybe this breakout is going to lead to more tests here, pattern, and then we have a bigger breakout here that goes to the top. So that's the vision on the monthly. And what it helps you identify potential resistance along the way. So right now we're going to go on the weekly. We're going to see this alert right here. This is strong overhead resistance, and we'll see how that guides us into the breakout if there's one. Stage 2 probably on the weekly. So let's head over to the weekly. And on the weekly, I have my volume, my RSI. I don't have the Mansfield indicator, but I'm still using the RSI. When I see stuff going over the halfway point, going on top, that is, for me, a confirmation. Oh, look. Let's get rid of this. I don't even have to look at the candles. All I have to do, you reverse engineer it. If it really is a breakout, start by looking at the RSI. Check, going over halfway point, going upwards. Look at the candle, the volume. If it's twice the average of the previous 4 or 5 weeks, check. And after that, most of the time, you'll have a little fancy candle that corresponds to the volume and the RSI going up, and most of the time it's going to be above the 30-week moving average, above a horizontal breakout line, above the Ichimoku cloud. Red is resistance, so if you're above it, it's good. You don't want to have red overhead resistance here. See how it goes. Whoa, price action gets sucked back in, and over time it evaporates the more you move sideways, and now we're above it. And this looks like a Stan Weinstein breakout. These two lines, remember, these were breakout lines defined by the monthly candle trend. Here, This is the wick on the monthly candle. This would have been a wick. This is noise. And these are wicks below. So, no, breakdown. Well, not really. If you would have went to look on the monthly, you would have seen that the monthly decided that that was just noise and the important support is more the 2650 than at these lower levels. And same thing here. The monthly defined resistance is at 2610 and I'll open 2810. And that's what defines the truest or the most strong resistance and breakdown levels. And those, if you don't go on the monthly, you'll see that they're invisible. Nobody would ever draw lines like that through candles like that on the weekly, right? It's just like, why would you do that? And that's why the price action didn't continue. Why did it get sucked back in? Why didn't it break down on the weekly? Well, to avoid those whipsaws, you have to look at the monthly defined resistance and support levels. Same thing for this. If you play on the daily, go look on the weekly. And on the daily, you're part of these wicks. So right now, let's say I remove, let's remove, no, I don't want to remove ultra nights. Let's remove this one, this one, this one, this one. On the weekly, you could have defined your breakout levels here. Let's remove this one. You would have, that's how you do it on the weekly. Or that's how you do it on any time frame. For that time frame. And here there's another launching pattern. So this is how you would have done it on the weekly. Let's say let's say you didn't start with a high prevailing trend. You'd have a pattern here. You could make a case that you had to have it close overhead resistance right here. Anyways, you broke out through both of them. You had to close above it. You had the candle twice the volume. You had the RSI going up. So right there, if you didn't, and Stan didn't even use the Ichimoku cloud. So let's say you didn't have the Ichimoku cloud, and you're just doing it old school, and it would have looked like that. 30 moving average going up. You would have entered right here. If you're a trader system, you would have put it under you put it right here under 30-week moving average if you could, or if you got greedy and you wanted a better reward, a higher position size, you could have put it 4 to 6% under the breakout line, under round number. And investor's way, you put it right here. So that would have been your initial setup as of this breakout candle that happened last week. So right now there's a breakout. Cool. And this is the setup right here. So that's how it looks like on the weekly. And all these little wicks here that go out, this on the daily it would have had probably closes below those lines. And that could have been a breakout or breakdowns that you got whipsawed out of because you didn't look at the higher prevailing trends, more important support and resistance. And on the monthly, it's even more important, more weight added to it. All right, see how these look like, these breakout lines? All this noise, the weekly right here, that's the breakout line we have on the weekly. But on the monthly, we know that if it breaks below that level, it's going to go down. It has high probability of going towards its target. If it breaks above that level we identified before there, the 2810, then a candle that breaks out above that means it goes up. So we on the monthly, we wouldn't have had to wait for this week's candle for breakout. We knew that we had a monthly candle breakout when this candle closed above that 2810. So that's the dynamics, different dynamics between time frames and what's defined on the higher prevailing time frame is invisible resistance or support on the smaller time frames. If you get whipsawed, price action reverse. What happened? I understand. There's no resistance on my chart. Well, go look at the higher prevailing trend. Monthly defined resistance. All right. You can avoid your whipsaws. Go look at it. And now This is a nice breakout. Stan always says stock moves 40 to 50%. Gains momentum, going up. And yeah, this is a nice breakout right there. So you could enter here. It's not too far off the breakout candle. Put your sell stop under 30-week moving average, or if you want the investor's way, right here under the low of the formation, and then you're set to go. Now, some more emotional management techniques. You're getting it here. Expect it maybe to go up a few candles, and then come back. It's going to come and test this 28.75 level. And if this resistance wasn't really important, the real breakout level that you're looking at, 27.50, it's going to go down here and then go back up. So you could enter here. Keep an eye on it. Expect the price to go even lower than when you got in. Expect that. Think if it doesn't happen, great. But it's going to happen. Go with that mindset and just observe these candles here. You want to see volume going. You want candles. Let's say it keeps going up. Next week, nice volume, greener candle. And then when you start getting red candles, you want to start seeing like that. And when it gets close to your breakout level, you could add to your position. If you're waiting for that, great. Add your full 1% of your risk of your NAV here. Or you could get here and take half of a position and then add the other half here. And then you'll start seeing the volume pick up higher and higher. And then the price action goes up. So that's how you refine the buying process for Stan. Breakout candle, or wait for pullback on low volume, go up. The drawdowns of waiting for a pullback, well, you might miss that stock never pulls back. Not the end of the world. There's other stocks. But the advantages, I think they far outnumber the disadvantages. The advantages being that you'll have that extra confirmation of actually seeing the pullback on low volume, which is very healthy, and seeing start to turn back up. So right away, you eliminate that from a possible risk of a hard pullback, false breakout. And then you could go full steam ahead. The price action, when it comes a little lower to back down here or here to the breakout levels, then you actually have a better risk to reward, because now the risk, your entry is here. Your sell stop is, it could even be a little higher if it's below if the through move average started moving up. So now from entry to potential stop loss, that dollar amount, you buy enough stocks for that dollar amount to equal 1% of your NAV. So now you'll have a lot, you could buy a lot more, since you lose a lot less for that initial setup than here all the way here. See, that's your risk. Your risk has become smaller here. So you get a smaller risk, thus enhancing your risk to reward ratio, which is always good. Plus you augment the chance of having a good trade because you've noticed the behavior of contracting volume. Very important, contracting volume. So that's a pretty sweet setup, right? This is another ticker I picked up from stageanalysis.net in the US stock screeners. Don't hesitate to go check that out, guys. All right. So Chuy. It's ready to go, man. Either get in now or keep the chart open for the next 1 to 3 months and pay real attention to it. Send an alert if you need, just in case it pulls back to these levels right here. And if it pulls back even lower, alerts are free. Just check out the volume. If it looks like that right here, buy. Buy. All right, buy the stock. All right. That's it, guys. See ya. Ciao.